Boy, did we get some big news out of Tech Data yesterday, TECD. It's one of the world's largest wholesalers of information technology products. Basically, Tech Data helps tech companies like Apple, Cisco, HP, among many, many others, get their products to market via a massive network of distribution centers. And yesterday, we found out that this company is expanding its reach. Tech Data announced that it's acquiring competitor Avnet's technology solutions business for $2.6 billion. This one's a real doozy because Tech Data stock shot up more than 20% on the news. I knew it would be up. I didn't think it would be up this much. Typically, you do not see an acquirer rally like that unless the market absolutely endures the deal. But there's a lot to like with the transaction. It gives Tech Data more exposure to the data center and helps them expand into the vast Asia-Pacific market, something that could be a big positive, especially since the company's most recent quarter reported a few weeks ago wasn't perfect. But anyway, so just how bullish is this acquisition for Tech Data? Could this deal be exactly what the stock needs in order to keep rallying, or did yesterday's monster 22% already bake in most of the upside? Let's check in with Bob Dukowski. He's the CEO of Tech Data. Learn more about how his company's doing and what this Avnet Tech Solutions deal means to its future. Mr. Dukowski, welcome back to Mad Money. Good to see you, sir.
How are you?
Have a seat.
See you again. Thank
All right,
you.
Bob, this was a monster deal, and it's we have had Avnet on and your company on many times. This was a division that was doing okay for Avnet. Why is it being perceived as being so perfect for Tech Data?
Yeah, I think the market and our customers and vendors understand exactly how the two pieces fit together.
Okay.
You know, Tech Data wants to invest in the data center and help our customers grow at the higher end of the market. The reason that's important is we want to help our customers get ready for the third platform.
Right, and which, by the way, you say third platform drives virtually all new strategic enterprise IT investment.
For the next decade. And so we needed more skills, more talents, more vendor relationships to be able to really be that off-ramp into the third platform.
Right.
We also wanted to balance our business out. We had become European weighted, 60%, 40%.
I always considered you when I saw Europe Week. I said, ooh, that could be bad for Tech Data.
So we wanted to find an acquisition that would balance us. And then thirdly, we wanted to find a way to get into Asia Pacific. And as a distributor, you have to have a presence there. You can't just go out and hang out a Tech Data sign in Asia Pacific and grow.
But that's only 3%.
But it's a footprint.
Tell me.
And
really?
it'll allow us to bring other vendors that we have relationships into that market and grow. So, for example, a networking vendor that might want to grow in Asia Pacific that we have a relationship with, we can take that product there. So that was what we were really after, and Technology Solutions checked all three boxes for us. It was the perfect move for us, and I think the market and our customers and vendors have acknowledged it.
Clearly, they love it. Now, we're talking about being more, we have to explain third-party platform technology people, talking about converged, hyper-converged infrastructure, cloud, mobility, information security, big data, all good through this.
All good, yeah. So, if you turn back the clock on technology, it really started with the mainframe.
Yeah.
And that's referred to as the first platform. And that was the industry standard for 25 years. Then this architecture called client server, small computers attached to PCs. That was the second platform.
Right.
The third platform is a whole new set of architecture that leads you to the cloud, it leads you to social, it leads you to mobile. And so in order to be there, you have to be big in the data center. And so we wanted to make these investments in the data center to position us to be able to take our customers into that third platform.
I think what's interesting is that you were very abject in your call, note saying, listen, we have to get in with the times, that you were a little too much notebook and PC, and this just leapfrogs immediately.
And we're proud of that heritage that we have, that broad line heritage of PCs and printers. But under the covers, Jim, we have an $8 billion data center business today. And so when we bring Technology Solutions in with more vendors, more customers, lots of talented people that understand that business, we balance Tech Data out between the broad line and the new higher end technologies. And by the way, the margins are better up there.
Right.
So we can earn a little bit more money because we add more value. And so, we have a lot of experience in that high-end business, and that's why when we saw Technology Solutions from Avnet, we knew that was the perfect match for us.
Now, I was curious to know how you arrived at the price, because what you were able to say with that price on the comp score was, this is basically extremely accretive next year, which is one of the reasons why the stock went up. So somehow it's good for everybody. I mean, it wasn't like that Avnet, Yeah, I know you didn't want to take advantage of that because they got some stock, but the fact is that you were able to price this so that next year's numbers go up big.
Yeah, we think it's a good deal for Avnet and their shareholders and a good deal for Tech Data and their shareholders. You know, if you remember, Jim, our balance sheet had virtually no debt on it.
Right.
And so with a little debt and a little leverage, it becomes very attractive to our shareholders. When you can put a little leverage on your balance sheet and find a strategic match like we did, that's where you get the doubling effect.
And you put it at, I mean, your cash flow is huge. You'll be able to pay this down very quickly.
Yeah, our goal is to pay it down in the next 18 to 24 months.
It's unbelievable.
We'll still carry some leverage at the end of that, but that's healthy leverage for a company of our size. Well, so it's got all the components of a really good deal for both shareholders.
Yeah, I just got to congratulate you. It was so clear that this was a great day, and I've loved your company for a long time. And even though Europe went down, you never skipped a beat. But this was a truly brilliant acquisition by your company.
Yeah, we're really excited, and we're excited with the talents and skills that are going to come into Tech Data. It'll be a difference maker for us.
Oh, it sure will be. I don't think the stock is done going up by any means. That's Bob Dukowski. He's the CEO of Tech Data. Guys, there's all sorts of decks and conference calls if you want to learn about why a stock can go up so big, even though it's the acquirer. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.